Hi, this is Jack. This is my bar by bar review of the Russell 2000 futures contract for December 5th, 2024. Bar 1, small gap down. We rallied, tried to test the close here, 81, tested the breakout point, 79, and reversed down sharply, forming a huge bear reversal bar. This is probably the start of a bigger second leg down from the sell-off that started yesterday on bar 26 here. Yesterday we had a trading range open and then a midday bear breakout, that reversed up into a bull channel, which ultimately became a bear flag because we're getting a bear breakout now on bar 1. So bar 1, it's a big bar with big risk, probably better to sell a pullback rather than sell the close, but reasonable to sell the close with a stop up here. The market is probably always in short and going lower, either to the low close or the low of the prior day at a minimum. Bar 2, by the way, I'm so sorry if you can hear me burp, it's so gross. Bar 2 is a bull reversal bar. We broke out below 1 and reversed up, pulled back a little bit into bar 1, but this isn't even a 50% pullback. And if you're a bear, you would probably sell this close and sell above that bar. There's just too much selling pressure to look to buy right now. And we're not really at any important support level from what I can see. You could say, yeah, spike and channel bull trend, testing the bottom of the channel here in the buy signal bar on 57. But this is just too tight of a channel to start thinking about buying yet. So I would say probably more sellers above that bar. For that reason, we broke out above and reversed down on bar 3, probably going lower, but buyers below 3, possibly a micro double bottom for a swing long, but pretty early in the day to think about buying, and clearly always in short. Big tail on 4, so probably forming some sort of trading range. Good follow through, stop entry triggered for the bulls, but the problem is bar 5 is a big bar. That means it's climactic. And really, we're more in the sell zone than in the buy zone. This could be a big bear spike, pullback channel, channeling lower, testing the top of the channel here on 5. Bar 6, breaking out above 5, maybe a double top with 3, strong 3-bar bull micro channel, but so far it's a trading range day, and we're near the top of the range, so getting into a sell zone more so than a buy zone. Possibly always in long, but really we need some more follow through and we need to get above these highs. We found sellers up there reversing down on 7 and then a small pullback and an even stronger bear breakout on 8. Definitely always in short, definitely in a trading range and probably going lower. Reasonable stop entry for the bears here. You know, it's trading range price action so far, so better to buy or sell a pullback if you're thinking about buying or selling. 1, sell a pullback. So 2 is good follow through, probably sellers above. So 3, good bear bar, but bottom of the range, and we reversed up from this level, so probably buyers down here, sell a pullback. That's not enough of a pullback. That's better. Maybe sell here with a stop up there. I think a stop above 3 is probably a skunk stop. 5 is a climactic bar, and it's probably not going to work, but we may go higher before we go lower. And if you're a bear and you put your stop here, what's the chance we get here before we get down there? Pretty good that we're going to get here before we get there, actually. But if we do get here, probably sellers. So reasonable to sell here, but if you are selling here, it would probably be wise to aim for maybe the low of the bar and put your stop somewhere up here. Because what's the odds that we get a duplicate of bar 5 that shoots up immediately? Probably not very good. So reasonable to bet that we won't go higher than the range of this bar up. So stop up here, sell the close, betting on a test lower, or even better, if today turns into a bear trend day or a bear trending trading range day, you could look to get 2R on your trade and get out down here, which is even more reasonable than getting out here because this really is the bottom of the range. It's the low close. And you know what? Now that we're looking at this, it's no coincidence that the bottom of this bull bar and the high of this bull bar, and let me turn snap off. Oh shoot, I really messed it up. Let me turn off. Okay. It's no coincidence that the high of this bull bar measured to the low of this bull bar projected down one measured move is almost exactly the same price as this low close on 49. The market is incredibly precise. But anyway, reasonable pullback to look to sell. Now this is strong enough for a second leg up, so maybe you bet on getting a little bit higher before we go lower. Reasonable to buy a small pullback here on this bull bar with a stop below the bar, expecting a little bit more up for a scalp. You didn't get much of a pullback here on 6, and I certainly would not chase the market higher. And if you did sell the close or sell above this bar with a stop up here, you're probably sweating a little bit, and probably definitely sweating during 7. But then once you get 7, you got to be thinking, okay, this was actually a pretty good move, and guess what? Now I can tighten my stop to the high of 7 and look to sell more here as we turn down, or maybe add on to my position here where I was originally planning on getting out, because now the momentum of my trade is carrying me into profits, and we're probably going a lot lower. So good bar for the bears on 7, and really good follow through on 9. A bit of an expanding triangle here. You could argue here and here, there and there, but pretty bearish day. It's 2 legs down in an overall trading range, but super bearish. Some good buying pressure here, but clearly always in short. Big tail on 9, so possibly buyers below, but tight channel down and lots of strong bars. Not a lot of overlap on the way down, so probably sellers above. Good follow through on 10, probably going lower. Now testing the bottom of the range, and we're below this low close, so probably going much lower. We're near a round number, 24.15, and 24.10 isn't far below. Any round number like this, ending in a 5 or a 0, is going to be some sort of support. So a small pullback and then another sell-off on 11, probably going lower. Lots of implied legs happening here, so this could end up being a parabolic wedge, and we might find buyers after we continue lower. So 12, deep pullback, and then another sell-off, and we stopped just shy of 24.10. Reversing up from 24.10, small bull bar, maybe not strong enough to reverse this tight channel down, but if you're a bear, you may cover above this bar and then look to sell again higher. And for that reason, it's not a terrible buy. And if you do buy above this bar, I think really you have to swing trade, because it is not 60% probability that you get here before you get to the low of the bar. Therefore, you cannot take a 1-to-1 trade. You have to take a 1-to-2 trade, because it is probably 40% or maybe even less that we get here before we get there. The stop entry never triggered. Sorry if you couldn't see that. Let me back up. So 13, you're swing trading here. You need to go for 2R with a stop down here below the bar. But what's, probably very unlikely that we get here before we get here. So just probably better to sell the close or sell above the bar. It's clearly always in short going lower. 14, trader sold the close and we broke out, but tail, so probably a pullback. Reasonable to sell the close, stop up here or there. 15, bit of a surprise, sellers above 14. Micro double bottom at a big round number. Well, it's not a big round number, but it's a fairly round number. But still probably always in short and more sellers above. 16, climactic bar, tail, probably sellers above. And instead a duplicate bar. Bit of a surprise. Bears may be starting to cover, but these bars are big and then they sell off, and then big and then sell off. It might be always in long, indicated by my EMA, but at some point we're going to get close to a 50% retracement of this sell-off, and we'll probably find sellers there. Didn't quite get there before we found them. 18 is turning down. It's an inside bar, maybe buyers below, but I don't think there's really any trapped sellers here, so we're probably going lower. 19, surprise second leg up, and then an inside bar, doji bar on 20. Could be a micro double top. We're just below the EMA. It's 2 legs up in what's the trading range now, but for that reason, we may find sellers above. 21 channeling higher, and then outside bar 22, neutralizing the market. Bit of a surprise bull bar here on 23, testing the midpoint of the sell-off, and then breaking out strong on 24. Clearly always in long and probably going higher. It's a bull channel, which is always a bear flag. And actually, it's a bull breakout of a bull channel. which should fail probably within a few bars. 25 inside bar, bear bar, but tail, probably buyers below. Buyers below for a second leg up. 26, good stop entry signal bar, but getting climactic here, so we may need to go lower. 27, channeling higher, testing the trend line and reversing up. But then possibly a micro double top here, tight trading range 28, breaking out below 27 and reversing up. Holding above the EMA, we could be channeling higher, spike and channel bull trend. But lots of overlap and bad follow through in this rally, and then these two bars are the strongest bars in the entire thing. And right after these two bars, we're going sideways. So if it's so bullish, how come we're going sideways after these two good bars? This could be, a third leg in a trading range, and we may break out to the downside. 29 doji, and then 30 bull breakout, but top of the range. Trader sold to close on 30. 31 trying to break out below the tight trading range in EMA. I expect us to go lower. Reasonable sell the close bar or sell a pullback. And instead, buyers below the bar. Outside bar on 32. Neutral market, tight trading range, probably better to just do nothing. 33 inside bar, and then finally a bear breakout, 34. It could be 2 legs down, or maybe even 3 legs down. Wedge, bull flag, testing the breakout point, 21, 22. Possibly buyers below 26, strong reversal bar, but tight trading range, probably going lower. Breakout may be failing 35, good signal bar for the long, but overall, this is the dominant feature of the day, and this certainly is not the dominant feature, so I expect sellers anywhere above these highs. 36, sellers above, outside down, deep pullback, and then a sell-off. 37, probably going lower. 38, big bear bar. And then 39, follow-through bar, turning up on 40, but the first reversal should be minor. 2 legs up on 41, and then 42 inside bar, failed bull bear breakout on 43, reversing up, and then good bear bar, 44. So tight trading range here, 17, 18, 19. We broke out of that range, and now we're breaking back into it and starting to go sideways. And we reversed up from this low. So we may not get too much lower before we find more buyers. Overall, very bearish day, so probably better to sell rallies. 45, small pullback and then lower. Follow through 46, 47, small pullback and then sell off. 47, breaking out below the range in the swing low. And pull this up. So 47, climactic bar, could be a climactic second leg at the bottom of the range. We may find buyers here. Turning up on 48, and then deep pullback, micro double bottom, outside bar 49, probably going higher. But sellers above, couple legs down, 51, couple implied legs down, small tight trading range. Second leg up, 52, but bad follow through, inside bar. So maybe sellers above, but then again, maybe sellers below, or excuse me, buyers below. 54, trader sold to close, and we're breaking out on 54, probably going lower. But bull reversal 55, quite disappointing here. Tight trading range, so it's going to be disappointing. It's pretty bullish right here, then it got bearish, and then it got bearish, and then it got bullish. It's bearish, but that failed. Now it's bullish. Because this bar looks pretty bullish, if we do rally, I expect there to be sellers up here because it's a tight trading range. It's a super bearish day, and I'm disappointed already with all this follow through. So if you're a bull and you're looking at long, you're probably going to get disappointed. Instead, bull surprise 56. Breaking out of the top of the range. Sellers up here, 57 pulling back into the bar. Could be a wedge bear flag. We're testing the breakout point, the body of 14. We failed to close above, well, we closed above that level, but we failed to hold it. This could be a pullback and need a second leg up. It could be an attempt to test the buy signal bar, 55. If you're a bull and you entered, or if you're a bear and you sold this high, maybe you sold the close of 56. You're disappointed. You sell more. You look to get out the midpoint. Actually, I'm drawing this completely wrong. Let's do it like this. We're closing at the midpoint of the breakout. Excuse me. Sorry if you can hear me burp. It's gross. I'm probably just confusing everybody and myself. It's an inside bar. We're probably going lower. Another inside bar, bull bar, possibly a bull flag, testing the breakout points here, 52, 53, reversing up. So reasonable stop entry, betting on short covering above that bar. And that explains 59. 59 is a big bar. It's probably always in long. We're testing the top of the channel up here, or at least the top of this trading range, probably going higher. We tested the breakout point 39 close and reversed down a little bit, but this is strong enough up for a second leg. Inside bar 60, deep pullback, testing the breakout point 56, didn't quite get there. I expect us to get there and possibly turn up. Instead, buyers at the close of 60 for a second leg up. 61, 62, consecutive bull bars, probably going higher. Now we have maybe 7 or 8 bars up with no pullback, so we're forming a tight channel. So whatever reversal we do get will probably be minor. 63, minor reversal, buyers at the close. 64, but 64 has a tail. Maybe you're a bull and bought the close of 62, disappointed with 63, scalped out for a smaller loss on 64, and we may find more sellers below this bar. But instead, buyers below that bar, reversing up on 65. Stop entry triggered for the bulls on 66, and we reverse down. Strong sell signal bar, top of the range. Could be a form of a wedge top. We're testing the stop entry short signal bar here, the 42 low, and turning down. It's a micro double top or a triple top, wedge top. Lots of overlap. You know, this whole rally, there's been problems with it. 56 is bullish, sideways. 59 super bullish and then sideways. 62 super bullish and then sideways. So the bulls may be giving up here, and that's what we're getting here on 67. But buyers at the close, reversing up, possibly a second leg down from 66, selling the close on 69, probably going lower. Channeling lower, but implied 2 legs down after 2 actual legs down. So maybe find buyers down here. Pause bar, but doji, probably sellers above. Instead, sellers at the close, 72, breaking out, testing the bottom of this bear channel. And then 73, a climactic breakout that's reversing up. Probably sellers above, but breaking out far enough below the stop entry signal bar for the bulls that I expect us to go a little bit lower. The stop entry for the bull is triggered, and it looks like it's failing, so probably more sellers below that bar. 75, breaking out, and then follow through 76, but big tails and implied pullbacks, we may find profit taking down here. Getting late in the day, doji bar, but channeling lower, and then a climactic breakout, 78. 78's a big bar with a big tail. Probably better to just watch at this point, but reasonable to hold short, at least for a small push down. I don't expect any rally to get very far if we do start to rally. So 79 inside bar, could be a higher low, but it's a triangle, which is a bear flag. Inside bar, weak close, so probably sellers above. And then 81 is a tiny bear bar. Really interesting day. Strong bear trend day. Lots of trading range price action. I say strong bear trend day. Really what I mean is there's a lot of really good bear swings in here where you could have made a lot of money holding short. If you look at the bear swings versus the bull swings, clearly the bears have less overlap and better follow through, so it's easier to hold short than it is to hold long. You know, you can look at 16, 17, 19 and think, man, this is a pretty strong rally. We might go a lot higher. And then you get a couple of really good bull bars, 23, 24, you end up just going sideways. And then 31 looks like the give up bar, but not going down without a fight. It's a tight trading range, trying to get a second leg up of this breakout. But ultimately it didn't work, and we got nearly a shaved bar in 34, and we went a lot lower. And then look at the rally here. Lots of overlap, sideways inside bars, sideways up here. Pretty stressful to be a bull on a day like today in the Russell. But really fun, you know, really fun day. Yeah, really not any open gaps for the bears, even though it's a pretty bearish day. If you take a look at the gaps, you know, we have an overlap between all the breakout points, like the low of 3, there's no gap here. And then the low of 39, you know, we overlap that gap. And then even here, the low close 14, that gap closed. And so what do you think is going to happen with this gap down here? This gap will probably close. I expect maybe Globex to rally, or maybe we'll keep selling off. I don't know. But it's interesting to think about because there's no open gaps except for this one. And then this has really bad follow through down here. So probably buyers below, probably expect it to fail. Anyway, that's the day. That's the Russell E-mini futures contract for December 5th. Thank you.